Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for the S&P mini futures for today, August the 19th. We're also going to take a look at the previewing the week. We begin with our news items as we normally do. This week we have a very light schedule this week. Nothing today or tomorrow. We begin with consumer price information, with inflation information on Wednesday, followed by crude. We also have, again, unemployment claims. And at the end, we close again with consumer confidence, sentiment, retail sales, and so on and so forth. So it's going to be a little bit lighter, but it's still very consequential, with two pieces of information that are very important. Unemployment, as always, and inflation. So let's take a look at what the market is looking like. And we're going to get a lot of the same for the next couple of days, unless something dramatic happens in the market reference to some new pandemic information that's unaware of, or something or the other. But here we find ourselves at the market with a clear continuation. After it bounced twice over the 200, we're continuing as a bull run, expecting to hit anytime soon. It's an all-time high. So that's where we find ourselves. If you notice, the ranges of our bars have gotten a lot smaller. Our ATR has shrunk drastically. We're at about 51.09, which is, it's very good. Remember, we're looking for at least a 14, above a 14, 1.1 million in average volume. We're at 1.2. The elements that we need to have an efficient market that we can use are typically here. You know, we have, like I said, over 14 on the ATR, a 1 million average, over 1 million average on our volume, but we're in the middle of a summer pattern. The volume is high, pandemic, economic recovery, so on and so forth. It's there, but the consumer, the traders are just not in the market. They're just not in the market. That's why we have these really tight ranges with very slow movement. And I'm telling you, when we're in our trade desk on Mondays and on Fridays with our live students, and we're trading live, it's painful. That hour and a half that we're there with them, it's really painful because the market is just not moving, but it's part of the learning process. Now, markets will always offer you opportunity, regardless of whether they're moving well or not moving well. The problem is that sometimes we don't have the patience, particularly as we're day trading, to wait for the openings. Now, where do we find ourselves here? Another trend line to the upside. We have an ascending triangle. Market breaks through. We're killing again. Here's our pop. Here's our market consolidating once again, and we're expecting, obviously, here, apparently, according to this, more continuation to the upside. Now, there's no guarantee that it's going to do that, and if the market wants to move lower, it has plenty of room to do so. But the expectation so far is more continuation of the same. So with that in mind, we look at our analysis chart. This is the one that's closest to our day trading here. And as we see, we have a real tight compression. Very little activity on Friday, as you can see. You can see the volume is very low. We're slightly above the intraday high within this pattern here, which is a triangle of compression. Now, clearly, the market needs to break clear. It needs to break clear above this, or it needs to break clear above that. I think that's going to give the market some really good direction, but it can stay within this pattern for a long time. And it seems to do that in these types of market where it tends to just chop around, kind of like it did here. You know, kind of stayed in this area for a little bit, went up again. So it stayed here for a little bit, then it finally broke out towards the later morning. Then it just, notice, it's just a sideways movement, just a really slight sideways movements with trade setting up, but the trades are taking forever to set up. So can we have breaks to the short side today? Yeah. Anything that can break below this line can be considered a short trade, but the sooner we do it, the better, because the later we do it, the less risk reward we'll have towards here. The best idea is just to sit tight and wait for the market to break through. Now, can we have trades to the upside? Absolutely. We can trade up and up to this area, and once again, you have to make sure you keep an eye on risk reward. So again, you know, these are not very attractive markets. These are not real easy markets to trade. But if you're looking for something to trade today, I would highly consider waiting for the break of this compression. Take care. Have a great week. Let me know if you have any questions. We'll see you next week. Not next time on Wednesday.